Alors, bienvenue à vous tous à notre Coffee Break CDÉNÉ Café Virtuel. Cette session fait partie de notre série Au-delà de la crise, survie et résilience qui se concentre sur des sujets et des discussions pertinents pour le succès économique des entreprises au sein de nos communautés. Et il est important de noter que nous avons tous un rôle à jouer pour contribuer à un impact positif sur les résultats économiques de nos communautés et que le moment est plus que vraiment critique pour soutenir et supporter nos économies locales avec notre portefeuille. Alors, supporter nos entreprises locales et contribuer à la force de notre économie. Cela étant dit, je voudrais vous présenter notre expert en matière pour la discussion d'aujourd'hui. Having said that, I'd like to introduce our subject matter expert for today's discussion. I'm pleased to introduce, et je suis heureux de vous présenter, Mr. Michael Leonard, président et PDG d'Atlantic Central. Mike is the president and CEO of Atlantic Central, the regional trade association and central bank for credit unions in all 4 Atlantic provinces. With assets in excess of $6 billion, the 45 credit unions in Atlantic Canada certainly proudly serve over 300,000 Atlantic Canadians. Mike is also the chair of the board of Credit Union Central Canada, the national company that owns the National Credit Union System's shareholding within the Interact system, and a board member of Concentra Bank, the 13th largest bank in Canada, which is wholly owned by Canadian credit unions. Mike est gradué de l'Université St. Mary's, un des nôtres, et il possède plus de 30 ans d'expérience dans le domaine des services financiers. So Mike, I'd like to pass it over to you.
Thank you, Andre. And can you hear me okay? Good, thanks. And thanks everyone for inviting me today. And I will also add, since we had a little bit about my background, my entire family is from Digby. And so I've spent a very, very good chunk of my life in your part of the province and love it there. So I'm really pleased to be able to come and spend a few minutes today just talking a little bit about Atlantic Credit Unions and how we've managed through 2020. And so happy to share some insights with you as we go through these next few minutes. So maybe just to start a little bit about the scope of who we are. So we are credit unions in Atlantic Canada, all 4 Atlantic provinces. As Andre said, 300,000 members, about $6 billion in assets. But when you think about that a little more broadly, what we have is about $10 billion worth of mortgages, loans, and deposits that our members have entrusted with us. And so pretty significant, pretty small from when you compare us to Royal Bank, but a pretty significant business in Atlantic Canada with about 1,500 employees, 45 credit unions, 130 branches. And so what I'm responsible for at Atlantic Central is we offer a lot of services to those 45 credit unions. So things that I've got on the screen here: planning, lending support, strategy, marketing, payments, government relations, and on and on. So what we try to do is make sure that with all of our 45 credit unions, we do as many things once as possible rather than doing them 45 times. And that makes us more consistent, it makes us more efficient, and it helps ensure that the investments that we make get the best return. So I would say, I thought before we start talking about COVID, we could say where were we at before March 14th? And March 14th, I think, was the date that the province announced the lockdown. So I think there was a few things that we were really focused on before March 14th. Certainly digital services for credit union members. So, right now, if you're a credit union member, you can do almost anything that you need to do on your phone. And we're really working on enhancing those services. Certainly talent recruitment and retention. So how do you make sure you have the best people to serve your members and to develop your business? expanding access to financial planning and wealth management. And that's certainly an area, especially as the Canadian population ages, focusing more on what you do with what wealth you've built through your lifetime is important. Financial literacy, and for those who are familiar with the co-op principles, financial literacy and financial education is a cornerstone of who we are. So we do a lot of work with on financial literacy, both in schools and with people who are and adults. So financial literacy, growing our membership, obviously in any business, growing your customers is important. And then creating stronger collaboration across all credit unions. And so one of the principles that we use with our larger group across 4 provinces is the more we can do together, the stronger we're going to be. And I think that's a good principle for any small business to be thinking about, is how can I build alliances and partnerships that are going to help me leverage what I'm trying to do with my business. And so if you look at what we have here and where our focuses were, it's probably the same or very similar for most businesses. So we're not really different from most, focusing on digital, focusing on getting the right people, growing your business, growing your customers and your members, and then finding ways to collaborate. So that's really where our focus was before the pandemic. So then March 14th came. And so Andre, there should be a slide up that says first priority. Okay. So the very first thing we needed to do on that Monday morning was talk about safety and stability. So let's make sure that, first of all, our employees and our members are safe, and that we're confident that as credit unions, we're going to be able to continue to offer services to our members, even though we recognize those services would need to be different. We wanted to make sure at all costs that members were going to be confident in their credit union's ability to continue to offer services. And what we found, and I'm sure what many of your small businesses have found as well, is that there was so much uncertainty at that point around what the pandemic meant, what the risks of the virus were. So it was very difficult to understand, how we could ensure that level of safety. And so we needed to, we made a decision early on that we're going to make sure that we followed the provincial health authority requirements. And that might sound like a no-brainer, but there was lots of discussions internally amongst credit unions around whether we should be doing more. I don't think anyone was saying we should violate health authority requirements, but there was lots of conversation about whether we should go further. And I think what we decided to do was, let's make sure that no matter what we do, we can point back to those provincial health authority guidelines and say, this is why we're doing that. And that would help our members understand why we were making changes to the way we were offering service. Making sure we were effectively communicating changes, and then moving to work from home models. And we were talking a little bit before we started the session. My team has been working from home since March. As credit unions, we have lots of people that are still working in the branch, but even in a lot of credit unions, there are people that are working from home or in some sort of a hybrid model. So we had to sort that out, again, on very short order. So our second priority after ensuring safety and stability was about strengthening collaboration and communications. And so again, in our ecosystem, we don't have 45 credit unions all doing their own thing. We try to make sure that we're working together. So the first thing we said was, how do we make sure that when we start to develop things to respond to the pandemic, there are things that all credit unions can share in? And how can we make sure that if credit unions are developing their own communication pieces or their own policy pieces, that we can make sure we have an effective way of communicating those so that we can, again, make sure we're only doing things once. And so what we tried to do was what I called strengthen the regional collaboration model. And so that really involved a significant increase in communication. So we started having weekly calls with all of the CEOs. And I think Renelle and Lynn are on the call today. So they'll remember every Monday at 1 o'clock, we had a call where we talked about what was happening, what we were hearing. We had weekly calls with provincial regulators. So if any of you are working with companies that are regulated as organizations, staying in contact with your regulators in the middle of a public health crisis, we thought was really important. And that really paid off. And now, even now, 9 months later, we still have a call with all 4 provincial regulators every 2 weeks, just to stay in touch and keep the communication going. And it's working really, really well. And then we also started to have weekly calls with my national peers, the other centrals, the other 4 centrals across the country. And so there was a lot of information that was flowing, a lot of sharing in true cooperative fashion. We were sharing a lot of information back and forth. And we also increased our communication to members. So there was a lot of communication out into communities talking about what was changing and why it was changing. And especially, you know, there's lots of different views on, you know, how important it is to wear a mask, let's say. And not everybody thinks that's important. If you go back to March, there was lots of people who felt that reducing service to the in-person parts of credit unions wasn't necessary, that this was all blown out of proportion. And that's, again, why we felt it was so important to stay connected to those public health guidelines so that we could say we were following the province's guidelines. So another really important piece of what we did was we decided to create what we call the pandemic support team. And so in our company, we have about 100 employees, and everybody has a day job and everybody works really hard. And we said, we're going to need to dedicate some specific resource to responding to the pandemic. And so we pulled about 15 people onto a dedicated team, told them to put their day jobs aside as best they could. And we started to work on creating materials and content for credit unions, again, to get to that 1 versus 45 approach. And so we really focused on things like communications, internal communications to staff and external communications to members and communities, branch changes. So there was lots of permutations to how credit unions decided to adjust their approach to branches. So early on, some, as an example, posted a staff member at the door. And when somebody would try to come in, they would ask them questions. How are you feeling today? Have you been out of the province? Those types of questions. We had other people who said, you can call this number and you can text us when you're in the parking lot, and we'll text you back when it's time to come in. And then we had a couple of credit unions in PEI that had drive-through tellers, and they decided to just offer service through the drive-through window. So lots of innovative ways to try to make sure that we're still serving members and still ensuring safety, everybody's safe. So we had to work through those branch changes, and we published a lot of guidelines and documents for credit unions in looking to make those changes. Another area where we spent a lot of time was on HR related questions. So when you think about your team and you think about all of the things that they might be working through, you know, how do you deal with somebody who wants to work but has somebody in their household who's immunocompromised and doesn't feel safe coming to work? What's the credit union's obligations? So we created a relationship with a regional law firm that specialized in employment law, and we got guidance from them, and then we were able to publish that once, so that 45 credit unions didn't have to go and try to find answers to those questions. We also launched new products, and you may be familiar with SEBA. I'm sure you probably are, but it was kind of chaotic in the background. All of our financial institutions trying to work with EDC. The Prime Minister made an announcement about the program, and then but the program wasn't even worked out yet. And so we had credit unions had members saying, when is this money going to be available? We didn't even know what the program was about. So all financial institutions had to work on really short notice to pull those programs together. So that was one of the things that we did. And then again, a lot on messaging. And then we started on all of our external communications. We put a lot more focus on financial literacy, managing savings, managing spending, managing debt. So trying to put that focus back on how to manage your money, especially in the middle of a crisis. So that really was the first, let's say that was March, April, May. And then once you get into June, things seem to start to level out a little. And we got into a bit of a groove, and I think we were working really well in that model. And then we started to say, okay, this is not going to go away anytime soon. So how should we be looking at our business? Because there was lots of people who were making predictions about, when things would return to normal, what the state of the economy would look like. And so we need to start thinking about, for the first few months, it was working almost day to day. Then we needed to start thinking out a little bit longer. What's the longer term implications for this? So do we make changes now? How do we monitor the environment? And when will we know if some of these things are long-term trends, or if we're going to see a return? So are people going to go back to dealing in branches the way they used to? Or is this increase in remote and using technology, is that more permanent? So those types of things. So instead of making decisions, what we decided to do was gather data. And so we've really been focused in the last, say, 3 or 4 months on monitoring data. And so, and I would break that into external and internal focused. And, this might look, especially if you're a small business, you might look at this and say, well, that's great if you've got 1,400 employees, or you've got a team that specializes in data analytics. But data, there's lots of data around that any size organization can access. And some of that data can come from you and knowing your own community and talking to people in your own community. So for us, we've been focused very much on understanding trends in our membership. So electronic transactions, borrowing and savings rates, branch traffic, and we have all that data in-house. But then we also look at things like retail spend, and we get that, you can get that from Stats Canada, economic growth rates, and interest rates, and all of that is publicly available. So I would suspect that any business, whether you're big or small, you all have access to that publicly available data, and then you have some data that you can access from your own business to understand what's happening, and you can also pull it from your peers. So if you're part of a network in your community, even if you're a very small business, in talking with your peers and understanding what are you seeing and what are you hearing, that will give you some insight into how things may be shifting for the type of business that you're running. And then on the internal side, very much focused on how our people are doing. So we've done multiple surveys. I think we've done 4 surveys of our employees where we've checked in and said, how are you managing? And understanding how somebody's doing while they're at work really doesn't tell the whole story when you think about how they might be managing at home, especially if work is now at home. And so we've spent a lot of time trying to understand how are people doing, how is their mental health, how are they managing, and what can we do to help support them better. We also have some productivity metrics. We measure employee turnover, sick time, overtime, those types of things. So if you look at that holistically, it gives you a sense of how your customers are shifting, and then it also gives you a sense of how your people are doing. And then we're going to use those data sets to help us drive longer term decisions for the business. So one of the things that Andre and Dale asked me to comment on was, looking forward. And so, I don't have I don't have a crystal ball. So, but I'll tell you this is what I hear, is that we should expect interest rates to remain low until at least the end of 2023. And so that has, for our business as financial institutions, that has a significant impact on our business. So that's a really important piece of data for us, is we can make an assumption about what the interest rate environment is going to look like for the next couple of years. We also believe that government financial support will continue federally and provincially, but it's going to be much more targeted. So back in March, the federal government was just throwing money out. And I will say, this is my own perspective, I think the federal government did a tremendous job under enormous pressure in trying to get stimulus money out into the hands of Canadians. So now, what we're seeing now, I think, is because they have data and they understand what's happening better, we're going to start seeing that money go out in a more targeted fashion. I think it sounds like infection rates are going to remain low. That's the assumption we're making in Atlantic Canada, is that provincial governments in Atlantic Canada are going to have restrictions in place that ensures that we don't get to, say, where Alberta or Ontario or Quebec is today. And so that's an assumption that we're making. we're assuming there is a lot of cash in the financial system right now. So lots of excess money. Every financial institution in Canada has seen a huge increase in deposits and a decrease in lending. So our expectation is that, especially as the vaccine starts to work its way through the population, people start to get more comfortable with this, that we're seeing the end of the tunnel, the light at the end of the tunnel, that consumers will start spending again. What's not clear is how that spending is going to occur. Is it going to be local, or is it going to be Amazon? And I think that's one of the things that we're thinking about. It's the same as mobile banking. You know, right now, a lot of people are doing mobile banking. A lot of people are spending money on Amazon. When the economy starts to open up again, are people going to go back to shopping in local stores, or are they going to just keep clicking from the comfort of their couch? And I think that's the same issue that we have as a financial institution. The other thing that we're thinking about is that if you look at aggregate data, you know, we've already had a really strong bounce back in our regional economy. So we had this huge drop off in Q2 and a really strong rebound in Q3. But if you look at the aggregate data, it really doesn't tell the story. And I think that, like any aggregate data, it masks where the problems are. And so I think Andre, you know, said it earlier. If you think about the challenges that we have in the tourism industry and in the hospitality sector, and credit unions are really invested in those parts of our community, in those businesses in our community, you know, saying that the economy will be almost back to normal really doesn't do justice to those small businesses that I think we should expect are going to struggle for quite a while still, and especially in the tourism industry. So we're very much thinking about that, and we've been having some discussions with the province about, you know, how can we offer better support to those parts of the industry? And you know, we don't have any solutions for that yet, but that is something that I think we need to continue to think about. And then I think that the conclusion is that small businesses are going to continue to bear the brunt of the impact over the next few quarters. And so I think this is probably one of my last slides. You know, how is this going to impact our strategy in the long term? So we're looking at changing consumer behavior. Are we looking at longer term higher unemployment, impact on small business, and consumer use of technology? So those are the longer term trends that we're going to be monitoring. And again, you know, given the size of our business, I think regardless of whether you're a bigger business or a smaller business, it's important to understand what are the signals I need to be looking for about how my business might be changing, and then start to monitor those and find out how you can get that data. And so I think this is it, the last slide that I have. I think the lessons that we've learned, and we had a conversation about this a couple of months ago, you know, what lessons have we learned? And I would say the first one is maybe the most important one, and that is that the power of collaboration is very real. And I think that the work that the 45 credit unions did together in March, April, and May was remarkable. And I think that we showed the real power of the cooperative model and the real power of our group working together in the way that we shared and supported each other. The other thing I think is that employees value calm and positive leadership. And so if you think about in the middle of a crisis, what kind of leader are you? If you're somebody who's agitated and negative, you're going to, you know, people will respond a certain way. I think people respect positive and calm leadership. And that's what I think a lot of myself and my peers have tried to do for our teams. We regularly prioritized and reprioritized our work. So we set a business plan in December. I had a meeting with my board in March. I said, you can forget about that. So we're in the middle of the biggest business disruption in modern history. Whatever we thought we were going to do in December, that's not really the priority right now. We reprioritized, and then we did it again in April. We did it again in May. And we went through, is this where we need to be spending our time? And we were very willing to change on a dime if we needed to. And then the last thing I thought was really interesting was we showed that we could work a lot faster than we thought. And so we're usually very methodical in the way that and very planned and the way that we do big projects. And I think what we learned through this process is that we can go a lot faster than we thought we could and still execute really well. So now we're looking at how can we take these lessons and incorporate them into our business over the next 12 to 24 months. So that's a little bit about us and where we've been. And so Andre, I'll turn it back to you for any questions.
Merci, merci Mike de nous avoir fait part de tes réflexions et tes perspectives en addition de l'expérience vraiment et les actions prises par nos caisses populaires. We can all apply some of the lessons learned and approaches that you've shared. Je pense que nous pouvons tous constater qu'il existe un lien direct entre le support de nos entreprises locales et la stabilité et croissance nécessaire de notre économie. Alors, n'oublions pas de supporter nos entreprises locales.